Welcome to the DX Today podcast, your daily deep dive into the AI ecosystem. I'm Chris, and joining me as always is Laura.
Thanks, Chris. It is great to be here because today we are tackling a story that I genuinely think future business school students will be studying for decades to come.
That is a bold way to open the show. So before you scare everyone off, tell us plainly what actually happened and why it landed with such a thunderclap this month.
So here is the headline in one breath. Anthropic, the AI lab behind Claude, has confidentially filed draft paperwork with the Securities and Exchange Commission to go public, and the numbers attached are simply staggering.
Okay, confidential filing is a phrase a lot of listeners hear and immediately glaze over. So can you unpack what filing confidentially with the SEC really means in practical terms?
Absolutely, and it matters more than people think, because a confidential filing lets a company submit its draft S-1 prospectus privately, work through SEC feedback quietly, and only reveal the full financials closer to the actual offering date.
So they get to rehearse the most important financial performance of their corporate life behind a closed curtain before the whole world is allowed to scrutinize every single line of the numbers.
Exactly right, and the timing is the part that made Wall Street sit up. Because Anthropic filed that draft on June 1st, 2026, just days after closing one of the largest private rounds in history.
All right, you keep teasing these enormous figures, so let us finally put them on the table. Because I suspect the valuation is where this story stops being normal and starts being historic.
Here it is then. Anthropic closed a $65 billion funding round at a post-money valuation of $965 billion, which for the first time in history pushed it past its longtime rival OpenAI.
Let me make sure I'm hearing that correctly, because $965 billion is breathtakingly close to $1 trillion for a company that, by historical standards, is still remarkably young.
You are hearing it perfectly, and that is precisely why analysts are losing their minds. Because Anthropic was effectively founded in 2021 and is now flirting with the kind of valuation that took Apple decades to reach.
That comparison really lands for me. So I have to ask the obvious skeptical question that every reasonable listener is thinking right now, which is whether there is any real revenue underneath this enormous number.
That is the perfect question. And honestly, the revenue story is the part that makes even the skeptics pause. Because the growth curve here is unlike almost anything in the recorded history of enterprise software.
Now you have my full attention, so walk me through that trajectory carefully because I want to understand whether this is a real business compounding fast or simply a hype balloon waiting for a very sharp pin.
So at the end of 2024, Anthropic was at roughly $1 billion in annualized revenue. And by April of 2026, that figure had reportedly climbed to about $30 billion annualized.
Hold on. Going from 1 billion to 30 billion in roughly 16 months is the kind of slope that makes a person reflexively double-check whether someone accidentally added an extra zero somewhere in the spreadsheet.
I had exactly that reaction, and it gets even more dramatic because their run rate reportedly jumped from around $9 billion in January to roughly $47 billion by May of this same year.
So, in the span of a single calendar year, they are telling investors the business could surpass $50 billion in annualized revenue, which is a roughly 30-fold increase in about 16 months.
That is the claim, and what makes it so disorienting is that no enterprise software company in recorded history has ever compounded at this rate while operating at this absolute scale of revenue all at once.
Okay, that genuinely is remarkable, but the contrarian in me wants to push back, because rapid revenue growth and durable profitability are two very different animals. And AI compute is famously brutally expensive to run.
You are putting your finger on the single biggest open question. Because we know these labs spend astronomical sums on chips, data centers, and electricity, and the confidential filing keeps those exact cost figures hidden for now.
And that secrecy is exactly what should make a thoughtful investor a little nervous. Because a company can post dazzling top-line revenue while quietly burning through cash at a pace that would terrify an accountant.
Completely agree, and that is why the eventual public version of this S1 is going to be must-read material, since it will finally reveal the gross margins, the burn rate, and the true cost of intelligence at scale.
Let us widen the lens for a moment, because Anthropic is not actually doing this in isolation, and I understand its great rival OpenAI is essentially racing toward the very same public market starting line.
That is right, and the rivalry is what turns this from a single company story into an entire era. Because OpenAI has also reportedly filed confidentially and is valued at somewhere around $920 billion.
So we have two companies, each worth nearly $1 trillion, both sprinting toward an initial public offering at essentially the same moment, which feels less like a coincidence and more like a starting gun.
It really is a starting gun, and one top analyst captured the mood perfectly by saying Anthropic's filing was opening the floodgates for the entire IPO market, which had been frustratingly frozen for years.
That floodgates metaphor is doing a lot of work, so help me understand the mechanism, because I want to know why one AI lab's paperwork would suddenly unlock public listings across the whole technology sector.
The logic is basically psychological and financial at once. Because when a marquee name like Anthropic proves there is enormous public appetite for AI equity, every other private company suddenly sees a viable, lucrative exit window opening up.
Which means the bankers, the venture investors, and the late-stage startups who have been waiting impatiently for years all start dusting off their own prospectuses the moment they smell a receptive and hungry market.
Exactly, and the appetite genuinely appears to be there. Because one forecast I saw pegged Anthropic's median first-day closing value near $1.1 trillion, which would be roughly a 14% premium over that private round.
A first-day pop into trillion-dollar territory is the kind of thing that makes headlines. But it is also precisely the kind of thing that makes wiser, grayer heads start muttering nervously about the late 1990s.
And they are muttering loudly because the dot-com bubble comparisons are flying everywhere right now, with skeptics arguing that we have seen this exact movie before and we all remember how the third act played out.
So let us steelman the bears for a minute, because I think they deserve a fair hearing, given that an enormous amount of ordinary people's retirement money tends to follow these glittering, irresistible stories.
The bear case is actually quite coherent, and it goes like this. Valuations are being set by a small circle of insiders. The revenue is impressive but unproven over time, and the underlying costs remain genuinely enormous.
And the bears would add that we have repeatedly watched hot technology sectors attract a tidal wave of capital, inflate far beyond any reasonable fundamentals, and then correct violently once the easy money finally dries up.
That is the heart of their worry, and it is not a crazy worry at all, because history is genuinely littered with revolutionary technologies that were absolutely real and yet still produce spectacular, wealth-destroying financial bubbles along the way.
So now give the bulls their turn, because I suspect they would argue that this particular moment is fundamentally different from the dot-com era in at least a few very important and concrete respects.
The bulls would say the obvious difference is revenue, because most dot-com darlings had essentially no income and survived on pure narrative, whereas Anthropic is reportedly generating tens of billions of dollars in actual recurring annualized sales.
That is a genuinely fair point, because there is an enormous difference between a company selling a dream with no customers and a company that apparently cannot onboard paying enterprise customers fast enough to keep up.
And the bulls would press further, arguing that artificial intelligence is not a single product but an entire general-purpose technology layer, much like electricity or the internet, that quietly reshapes every industry it eventually touches and transforms.
If that framing is even partially correct, then comparing this to a narrow speculative bubble might actually understate the situation, because general-purpose technologies tend to create far more value than even their loudest optimists initially predict.
That is the crux of the entire debate, and the honest, humble answer is that nobody listening, including the two of us sitting here, actually knows yet which of these two stories is going to win.
Before we get practical, and I want to dwell on the competitive angle for a second, because the fact that Anthropic narrowly leapfrogged OpenAI in valuation feels like it carries real symbolic and strategic weight in this race.
It absolutely does, because for years, OpenAI was treated as the undisputed frontrunner, and seeing a rival edge ahead in the eyes of private investors signals that this market has at least two genuine, credible heavyweight contenders.
And that two-horse framing matters for the public markets too, because investors love a clean narrative, and a heavyweight rivalry between two nearly trillion-dollar labs is almost irresistibly easy for the financial press to dramatize and amplify.
Right. And the danger inside that clean narrative is that a thrilling rivalry can pull even more speculative money into the sector faster than the underlying fundamentals can possibly justify, which is exactly how overheating tends to begin.
I appreciate that intellectual honesty. So let us get practical for our listeners, because many of them are naturally wondering what an event this enormous actually means for their own portfolios and their everyday financial lives.
The first honest thing to say is that a confidential filing is not a stock you can buy tomorrow, so there is genuinely no need for anyone to feel any pressure to act this very instant.
That is a really important grounding point, because the breathless headlines can create a false sense of urgency when in reality, the actual public listing is still months away and many crucial details remain completely unknown.
Precisely, and when those details do finally arrive in the public prospectus, the smartest thing any individual can do is read past the dazzling valuation and look hard at the margins, the costs, and the competition.
And I would gently add that anyone treating a $1 trillion AI listing as a guaranteed lottery ticket is probably not thinking clearly, because even genuinely revolutionary companies can be catastrophically bad investments at the wrong entry price.
That is such a crucial distinction, because being right about the technology and being right about the valuation are two completely separate bets. And plenty of people in history have won the first while badly losing the second.
So if you had to compress this entire sprawling story down into one single takeaway for someone who only catches the last 30 seconds of our show, what would that essential takeaway actually be?
I would say this: we are watching artificial intelligence formally cross over from a private research curiosity into a public trillion-dollar pillar of the global financial system, and that transition is genuinely historic regardless of how the bubble debate resolves.
That is a beautifully clear way to frame it, and it leaves me thinking that whether this proves to be a bubble or a foundation, the sheer scale of the moment is simply impossible to ignore.
I could not agree more, and I think the most exciting and slightly terrifying part is that we are all going to find out the answer together in real time over the next several remarkable years.
That's all for today's episode of the DX Today podcast. Thanks for listening, and we'll see you next time.